Good morning, everybody. Darius Dale here to present our macro minute for Wednesday, October 27th, 2021. Starting with markets, we got stocks down, commodities down, crypto down, bond yields down, with more curve compression in the treasury market. Big movers today. You got WTI and copper both down 1 to 1.5% apiece. Bitcoin down 5%. Two-year treasury yield up 5 basis points to a new cycle high of 0.49%. On Bitcoin specifically, taking it to the chart, our probable range model called this overbought condition out mid to late last week. Now the same model is flagging in oversold condition here. You got about 20% upside to a little bit over 70,000 in our probable range process, with only 1.1% downside to 58,000. Again, don't expect it to V bottom and go straight to 70,000 plus tomorrow. This probable range process typically takes about 1.5 to 2 weeks to go from upper boundary to the lower boundary, and then from the lower boundary to the upper boundary, another 1.5 to 2 weeks. So don't, when I talk about the ranges in the morning, you definitely want to keep that in mind as it relates to the sort of duration with which you're reacting to these signals. Moving on the economic front, more evidence of a post-Delta bounce in U.S. and global growth by improving consumer confidence indices in Germany and the U.S. Starting with the U.S., you get the Conference Board Index tick up 4 points to 113.8 in October. That's the biggest increase we've seen since June. Germany's GfK index, that ticked up 0.5 points to 0.9. That's the highest reading we've seen since last April, and that was a November number. And then finally, we're getting some peaking data with respect to home price appreciation here in the U.S. So you get the S&P CoreLogic Case-Shiller Index up only 10 basis points to a fresh all-time high of 19.8% year over year. I believe that's an August number. Again, but obviously the third derivative is really quite negative. It has been really since the onset of the summer. The home price appreciation that we've seen, really over the past 12 to 18 months has structural implications for OER via the typical 18 to 24 month lag, which it takes to reprice sort of the OER with respect to home price appreciation. So don't expect shelter CPI to go to 5 or 6% tomorrow. It's going to take a matter of years actually for that to really filter through to CPI. In terms of what's overbought and oversold, nothing's overbought, oversold. The dollar's oversold relative to the Mexican peso. You got IG credit spreads. Actually, IG credit spreads are oversold. So if you're lighting up on some credit risk there. With respect to today's setup, you got 3.1% downside in the S&P 500 versus 0.8% upside. Bloomberg Dollar Index minus 0.2% downside versus 1.3% upside. And then lastly, the 10-year Treasury yield minus 5 basis points of downside versus 18 basis points of upside. So with that, Darius Dale presenting our macro minute for Wednesday, October 27th, 2021. Best of luck out there.